Hey traders, everybody's worried about the market going into Monday. Fear, recession, doubt, uncertainty. Well, don't fear. We're going to talk about why now can be the best time to trade options in the market with this volatility. We're going to go through what Jerome Powell is doing, what Elon Musk is doing, GDP, the trade deficit, and we're going to jump into some live trades on the option trading platform that are going to allow you to make huge profits going forward. So with that said, go ahead and hit the like and subscribe buttons down below. Let's get this video at least 100 likes. Also download the free options workshop in the link below. It talks about the main benefits of trading options over buying stocks. Now, the Fed, Jerome Powell, has had a cautious approach to interest rate cuts over the last couple of years. And inflation is now coming down in check. So he's got the power now to go ahead and effectively cut interest rates a quarter point in, it looks like the expectation now is one in June and then another one in September even. And it's much sooner than expected. So expect more rate cuts ahead, which will help give the economy a kick in the pants. So while inflation is still above that 2% mark, it is cooling. So that allows him to go ahead and do that. The market is adapting to these potential changes, and with tariffs and immigration policies and such, these can contribute to huge opportunities for the savvy investors going forward. Now, whether you like Trump or not, that's beside the point. We've got to understand the way that he operates and the way this new administration is operating. And remember, when he put on these tariffs, he initially stalled them for 30 days. So now Monday, they're going into effect. But he could very well come out. Who knows if this is going to happen, but he could come out and come to some sort of negotiated deal with Canada, Mexico, and China, or one or two or all three, and make a huge impact on the market. Remember, he watches the market and he doesn't want to see it tank. So he's going to go ahead and do what it takes to keep the market from tanking big time, I believe. Let me know your thoughts down below. By the way, if you'd like a free copy of the Options Strategies Trading Guide, comment Options Guide down below. So the Fed's decision to lower interest rates is primarily affected or influenced by a couple of different things. Jobs. He wants to ensure that employment is maximized. Employment, not unemployment. Employment is maximized and people have jobs. And the other is going to be the inflation. He needs to keep the inflation intact for the people. So as far as the jobs go, now, all the jobs, you've seen increasing unemployment, but the majority of those jobs that were cut are government jobs. And those jobs, whether you think government has more control or lower tax rates and the people have more control over the growth in GDP, a couple of different sides of the story there. But the government job cuts can actually make the economy more efficient and balance our budget, which can bring down rates in the long term. So the jobs that are lost, being government jobs, I don't think is necessarily a bad thing. I think it can make us more efficient in the long term. Let me know in the comments what you think about that. Now, as far as the other one is inflation, and we've seen the numbers come in check with inflation. So we're not at the 2% point that the Fed really wants. We are coming more in check, and there's room to move in order for him to lower rates further. All right, guys, let's take a look at a few of my favorite trades right now on the Tasty Trade option trading platform. This is a great platform. There's a link down below. If you check that out, and it's very intuitive, and there's some benefits if you go through the link. Let's punch in QQQ right here. We are on the trade page, and then I want to be on table mode. And QQQ is the NASDAQ. Big move down last week. We'll give it more time. Next week may be volatile as well. So we're going to go out to April, which is 46 days. I like to go 45 days to expiration. What I would look to do is probably go the 505 and then $10 wide put credit spread. Actually, no, we're going to need to go higher than that. We're in April. Let's go 508 right at the money. Wait, no, 505 is okay. Let's try 505, 495. There we go. Okay, we can collect 505, 495. 505 is at the 45 delta. We can collect 1/3 the width of the strike right here, $3.30. So what we do is we're on puts. Again, let's go through that one more time. We'll go to the 505, puts are on the right, calls are on the left. We're doing a put credit spread to collect premium. We're going to click on the sell to sell the 505 and buy the 495. So right here on the ask, $3.30. Our max loss is $6.70. So this is a protective. It's $10 wide minus the $3.30. We hit review and send and place the trade. You can see on the curve mode, if we hit analysis and curve, this is what I love on this platform, is you can see the profit range. We just need to stay above that 505, and then we collect $3.30 in the next 45 when the market opens tomorrow. So that's one of my favorite. Let's clear that out. Let's look at another trade right now. SoFi, way down right now. SoFi is, I'm hugely bullish. You can see my target on SoFi is like 30 up here. Yeah, 30. And look where it is. It's down here. It's at 14 right now. So I'm going to go to the trade table mode. I'm going to go out 383 days to March of 2026. I'm pretty much guaranteed, at least I think. Let me know in the comments below what you think, that it's going to be lower than this come that time. But we can click. Now we're going to buy on the call side, a deep in the money call. We can buy that for $6.35. So 601 option contract controls 100 shares of stock. So that's $635. We go to the mid, we hit review and send, and we place that trade. If we go to the curve mode, you can see just like owning the stock, it increases in price as the value goes up. And it's only costing us $620 versus 100 shares that it would control cost $14.47 times 100 is $1,447. So less than half the cost of owning the shares outright. Now let's look at one more. One of my favorites, Uber. And again in Uber, trade page, table mode. Let's go out to April. If we look at the chart, it's had a pullback. My target's 90. So I'm going to sell premium 35 IVR so we can make good money selling premium. Go to the 75, 65. We can collect $263. Again, same situation. We just need it to stay above this 75. And if it does move down and test, we roll to the next month. But here we hit review and send and place the trade. All right, guys, that's it for this video. If you got something out of this, be sure and hit that like and subscribe button down below. Really appreciate it. Also, download the free options workshop in the link below. Leave a comment, ask a question. I answer every one. I'll see you in the next one.